No, relax. All right, let me ask you a question. Brothers and sisters, you grew up in a big... Did your parents have rules in the house?
Yeah.
Yeah. So your rule might have been that you're 14 years old, you got to be home by 9 o'clock on Friday night. Let's just make that up. Fair enough? Yeah. But you know what? In his house, where he was growing up, when he was 14 years old, you know what the rules were in his house? You're home at 8 o'clock on Friday night. Different rules, right? Different banks, different lenders have different rules. Would you agree? So they can make up those rules. But where do most of the lenders get their underwriting guidelines from?
Fannie Mae.
From Fannie Mae, Freddie Mac, Ginnie Mae, Government National Mortgage Association. That's the secondary market that buys the loans from us. So we have to write the loans according to their guidelines for them to buy them. If we don't do it by their underwriting guidelines, they won't buy the loans and then we'll be stuck with them, and we don't want that. Does that make sense? That's a class that I wrote also, the secondary market. Come next year to my class. Hopefully they'll train you here. I'll teach you all about that too. All right, yes, question?
Okay, so I have a question, I guess, specific to, employees like us, 1099.
1099, what do we do? I like that. What?
At the end of the year, right? Like $1 million deductions.
So you have $1 million deductions. So I'm going to talk about that. I don't know what I did with my marker. I used this one. Oh, I don't know. Did I? I apologize. I have CRS. I suffer from that. You know what that is?
Yeah, can't remember. Yeah, I got it.
Can't remember stuff? Okay. So,
Like, how do they give you the extra $1,000 when that money is in fact not coming in as income?
all right. So if you're living next door to me and you're working, you're making $5,000 a month, right?
Yeah.
Are you going home with all $5,000?
No, it's tax.
There's taxes, so you might come home with $4,000. Just say that.
Yeah.
If I'm getting my money tax-free and I don't have to pay taxes on the income that I have coming in, how much do I have every month?
$5,000.
No, $4,000. I have $4,000. I'm making $4,000 a month,
Okay.
tax-free. You're earning $5,000. I earn $4,000. Yours is taxable, so you come home with $4,000.
Yeah.
Mine's non-taxable. So are we even, basically?
Take home pay, yeah.
Yes.
Yeah.
But we don't qualify borrowers on take-home pay. We qualify borrowers on gross income. So if you have $5,000 a month gross income, do I have a gross income? No, I have a net income. So we artificially will add 25% as a general rule. It's crazy? Oh.
Money's not really coming in. It's just weird. It's weird how they would just add.
All right, so watch this. I'm going to...
I get it though.
all right, no problem.
Purposes, I get it.
Before we get
Yes?
to another equation, I'm still stuck on the half overtime equation. I never heard it all.
Okay, no problem. The overtime. Shh. The question is, what about overtime pay? Now, are you stuck on the equation on how we figured it out? Okay, so you remember the 40 times 40? We got that. We're good with that?
100, yeah.
Okay. How many hours of overtime were they working? 20 hours. How much were they getting paid an hour in overtime? $60. How did we come up with $60?
40 plus 20.
Right, because they get paid time and a half. 40 and 20. Half of 40 is 20. So that's $60 an hour that they get paid. Are you with me?
Right.
For overtime. How many hours did they work overtime? Only 20. Only 20. Well, 60 hours a week is a long week, right? But 20 hours of overtime at $60 an hour. You with me?
Right.
20 times 60 is $1,200. So they're making $1,200 a week in overtime pay.
Right. What I did was I took the 40 times 40 is $1,600.
Right?
And then I divided the 6933 in half.
No, you went down, your truck went off the road. You crashed into the tree.
All right.
Let me save you.
All right.
You ready?
Scratch that.
All right.
60 times.
All right, so I'm going to go slow for you because I'm sure. No. All honesty, I believe in not just talking to the people that understand everything. The people that don't understand, I want to bring them up to a higher level. And sometimes when I say things, people that are here, you're training people in your office or whatever, or maybe you get a better understanding, you hear something. So let's start from the beginning. You ready?
Yep.
Okay, you copying all this down?
Yep.
Okay. So they work 40 hours a week. They're making $40 per hour. 40 times 40 equals $1,600. Let's leave that on the side, $1,600.
Right.
Now they're working overtime. They work 20 hours of overtime at time and a half. Because they make $40 an hour on their regular base pay, time and a half is $60. 20 times 60 is $1,200. So now they're making $1,600 a week in their base pay, $1,200 a week in their overtime money. 16 plus 12 is $2,800 a week that they're making in what kind of money? Gross income. I take 2,800 and I do what? Multiply it by 52 weeks. Do you know why I do 52 weeks?
In a year.
Because there's 52 weeks in a year. They get paid every week. 2,800 times 52 is, I don't know. Whatever it is. Divide that by 12 gives me their average monthly income. I know that some months have shorter amount of days in it. We don't care. We're looking for their average monthly income.
It was 2,800 times 50 was 145,600, and then divide by 12 for the 12 months, and it came to 12,133.
Isn't that what we had up there? Outstanding. Outstanding. That's okay, fair enough. Did you get that answer? We'll talk later. After the break is over, I will sit with you out front
Okay.
and we'll go over it. Fair enough?
Fair enough.
Okay, excellent. Good. All right. So, let's go on to, everybody have one of those flyers? All right, just hang on to those for a second. We're going to do some work on that. So now we're going to move on to something called LTV, loan to value. Loan to value, do you guys hear this in your daily business? What's the LTV? Can somebody here, other than these two people here, explain, and myself, yes, explain exactly so we would understand what is LTV? Hi, what's your name?
Debbie,
Hi, Debbie, how are you?
I'm good.
Would you explain to us what LTV is?
It's the amount of the loan to the value of the home. So plus minus your down payment. So if you have a $100,000 home, you're putting 20% down. Your loan to value ratio is 80%.
That's pretty good explanation. That's one of the better explanations I've heard in a long time, right out of the gate. So very good. Nice job. Nobody's telling me to give her $1? Okay, I won't. All right, so I want you to remember this in very simple terms, okay? Loan to value is nothing more than what percentage of the value of the home is being borrowed. Am I borrowing 50% of the value of the house? 70% of the value of the house? 90% of the value? Are you with me? Is that important to know?
Yes.
What It depends on the home?
Depends on the deposit.
Okay. Let me ask you this. If I qualify for a loan, I get qualified for a loan for $500,000. How big of a house can I buy?
Depends on how much you put down.
Depends on how much I'm putting down, and that's part of the answer. It's not all of it, though, right? I got $1 million to put down. Can I buy a $1.5 million house? Here's the deal. If I qualified you on a $500,000 mortgage based on what you earn, because the houses that you're looking for, what your income is, it's a $500,000 loan that has in the payment, it has tax and insurance for a $500,000 home. So if I put you into a $1.5 million house, what's higher? Your taxes and insurance. You know what? Before I do the LTV here, I got to show you one thing here because I can see that this might be a little bit of a mystery here. Let's do this. Pity payment. You've all heard this, right? No. Who said no? Okay. How many people have never heard the term pity payment before? Oh. Wow, holy cow. How long are you in the business? Year and a half. How long are you in the business? 3 years? Who else raised their hand over here? How long are you in the business? Just started? Okay, you got to pass. How long? 10 years, and you don't know what a pity payment is? Oh, you do? Okay. Who's he point? He threw you right under the bus. And he was driving too. How long are you in the business?
6 weeks.
Right. All right, so you'll hear this sometimes. We call it a pity because it's a pity I have to pay it. I hear all the time. I'm going to do like this, P and I together. T-I, and then you have something that's called PMI or MIP for FHA loans. And then sometimes you have what you call HOA or CAM fees. This will make up, and when we do debt to income ratio later, I don't have to go through this again with you. I've already showed you this so you'll understand what I'm talking about. So here's the way it works.